Hello and welcome back to one of our weekly live streams. My name is Carl Peterson. I'm Credit Suite's content and social media lead. As always, I'm joined by Alfredo behind the scenes to make sure that everything behind the scenes is going okay. So chat is kept up with and you all get relevant links and QR codes on the screen delivered to you quickly. Let me know in chat where in the world you are from. You can even drop a few lines on what your business does. It's definitely one of my favorite things about these live streams. So let me know in chat, and I'd truly love to say hello and give you a shout out. Today, we're going to be diving into SBA loans, what it is exactly, who it's relevant for, discuss some specific aspects to the loan itself, and also give you some pointers along the way. As always, Mike from YouTube. How's it going, Mike? I see you. Mike says, seems every idea I have for a small business for myself keeps getting crushed. It's a hard fought win for someone who's disabled, about to give up. West Virginia. Mike's coming in from West Virginia. Good to see you, Mike. Don't give up. There are so many options for you. And I promise and I understand that defeat after defeat after defeat, you're probably going, yeah, right. Well, I mean it. There absolutely are options for you. Maybe it's SBA loans, like we're talking about today. Maybe it's something else. I'll tell you at the end how you can find out a little bit more. But nice to see you, Mike, from West Virginia, and anybody else joining in. I'd love to hear where you're coming in from and what your business is. So let's start at the start. What is an SBA loan? So an SBA loan is simply a loan provided by the U.S. Small Business Administration, or SBA, to support small businesses. The entire existence is in place to help small businesses access financing that they may not qualify for through traditional means. Mike, this may apply to you, like I mentioned, and others in chat as well. In these loans, the SBA guarantees a percentage of the loan amount right away, which mitigates the risk for lenders. And these partial guarantees they provide, they all go back to the main focus of supporting small business. This guarantee encourages lenders to provide loans to business owners that might be considered riskier under normal circumstances. So you might be asking yourself, what falls into that risky category? Well, it's because it's small businesses we're talking about here. And in most cases, there's a few automatic things attached to that title of small business. Things like leading with a financial risk being number one, right? That would be number one if I was to write these all out. So an inconsistent cash flow can absolutely pose some obvious issues. And in most cases, you're not just going to have one single loan cover every single thing, which means you have additional loan obligations. So sometimes this works for you. Sometimes it may work against you. Generally speaking, debt is good, right? We know this. We've learned this probably as business owners, and definitely from this side of the screen, we know that debt is good in most cases when it comes to being a business owner, since you don't have to dip into that cash flow, which is always a win. But when it comes to the approval process for loans, again, may work against you and may cause some unnecessary red flags. And obviously, this all depends on your specific situation. If we're talking about small business, brand new business on the block, that those red flags may be there. As much as everything checks out, unfortunately, that just comes with it, right? And there's also some additional risk automatically associated with small businesses as well, such as the likelihood of being affected more by economic downturns or a massive shift in the market. These are things that larger businesses may be able to navigate super easy or easier, rather. I think economic downturn affects everybody, but they may have an easier way of getting to the other side of that. Small businesses may not. So the SBA is obviously fully aware of all of those things, and they make sure that they meet you in the middle the best that they can, so to say. And the best part is that by guaranteeing part of the loan itself, it takes off a big hassle on your end, which obviously makes the lenders happy automatically knowing that 100% of they're 100% getting that amount at least, regardless. And it's also great for you since you can get these approvals a lot easier than you might from a traditional bank loan, for an example. One of the main things the SBA is notoriously great with is how many loan programs they actually offer to cater with the diverse needs that a small business has, which is a massive list. If you're a small business owner, it's an endless list, right? The most common are the 7A loan program, the additionally the 504 loan program, and then of course the SBA micro loan program, each serving specific purposes. Let me make sure I'm caught up in chat here. If you're just joining in, make sure you drop where you're at. I love seeing where everybody's at. I love hearing what you guys do. All caught up here. Okay. So let's dive into the 7A loan for beginners. This is likely going to be the one you see the most when applying for an SBA loan. It's their largest and the most common one to date. So the maximum loan amounts for the 7A loan looking all the way up to $5 million. Again, typically there's going to be a percentage guarantee in place depending on that loan amount, which is great. Very obviously so, especially when it starts getting larger and larger and larger of a loan. The funds are also able to be used for a wide range of business purposes, which obviously makes it very appealing to small business owners. That list includes uh, working capital and equipment purchase and real estate construction or acquisition. Debt refinancing is a big one, business expansion, inventory purchase, and a lot more, obviously. Repayment terms on the 7A, they're all based on the purpose of the loan, the ability to repay, and then, of course, the specific terms negotiated with the lender. But again, another benefit is these repayments for the 7A can extend all the way up to 10 years for working capital and all the way up to 25 years for real estate. We recently did a live stream about government grants, and actually our next one coming up on Thursday is going to be touching a little bit on government grants as well. And one of the main topics of discussion in our last one, and probably our next one too, because it just is part of grants and the conversation of getting grants, is how exact and specific those criterias are to qualify. Luckily, that's not the case when it comes to the SBA. There's SBA grants and there's SBA loans. So luckily, that's not the case when it comes to the loans. Criteria typically, just for the 7A part of it at least, typically just requires having a feasible business plan. Providing the ability to repay the loan is obviously, that's a must. Demonstrating a need for the loan, and then of course falling into the small business SBA size standard that they have. And in most cases, that's going to be the main four things, right? Obviously, there's additional factors at play to consider, but if you have those four things checked off, then you're already to a great start with higher chances. Now with the 504 loan, I mentioned there's three very typical types, which are the 7A, the 504, and the micro loans when it comes to SBA. So with the 504 loans, it's a bit of a switch up. The 504 loan program is specifically designed to provide financing for fixed assets such as real estate and equipment. And this excuse me, this program aims to promote the whole focus of the 501 is to promote economic development by assisting small businesses in acquiring long-term and fixed rate financing for these major assets. So if you're a home flipper or a builder, this is exactly what you would likely go after. The loan is a structured partnership between the borrower, so you, in this case, a certified development company, which is commonly CDC referred to as, and then a traditional lender such as like a bank or a credit union. The CDC is a non-profit corporation which is certified and regulated by the SBA, and its role is to completely facilitate economic development within a very specific community. The funds from a 504 can be used for acquisition or improvements of fixed assets like purchase of land and existing buildings, construction of new facilities, renovation or improvement of existing facilities, and then purchasing of long term machinery and equipment. So with this one, with the 501, the maximum loan amount under, or excuse me, the 504, the maximum loan amount under the 504 program is typically 5.5 million, although certain projects may qualify for a higher limit. I think I said 501 a few moments ago too. Sorry, my mind's somewhere else today. 504 is what we're talking about for the SBA loans. And these loans are usually structured as a way to finance up to 40% of the total project cost, which is quite a bit of money when we're talking about massive development in most cases. So criteria is a bit more specific with the 7A loan, right? So again, you must meet the SBA size standard. That's pretty much across the board, the main criteria there, or you'll see that pop up in every one of them, regardless of what program you go through. But in addition, the business must occupy at least 51% of the property it finances, or existing for existing buildings, or 60% at least for new construction. So that basically just means you need to have the majority ownership if you take that loan on, which makes total sense. Mike, trying to find help with business plan development. Being disabled with a TBI makes it really hard. No hands-on help around. Got it. Mike, Alfredo, could you drop our phone number in chat, please? Mike, Alfredo is going to be dropping a phone number in chat. And this goes for Mike and everybody else watching. If you give us a call at this number that's about to be dropped, we can learn specifically about your situation, about your location, about what you're trying to do. It's very hard to do that through a chat. So if you, and that's completely free, no obligation. If you give us a call, we'll see what we can do and where you're at, and how we can get you going here. Because it sounds like you're very willing to do so. So that's one of the major parts of being a successful business owner. So congratulations on that. So just keep going and give us a call. And that's what we're here for. That's what we're known for. So give us a call, and we'll see exactly how we can give you a hand, and what we can do to get you that funding you need, and all the other things you need. So we have talked about, so far, we have talked about 7A loans for the SBA. And then, of course, we've also talked about 504. Let's not forget microloans. The word micro gives you a hint here on what we're about to, about what it's defined as. The program is designed to provide small amounts of capital. I'm sure, if you didn't know that beforehand, you could have guessed it because the word alone. So instead of 5 million plus being the limit here, like the previous two programs we just mentioned, the microloan program has a max of $50,000, but the average microloan size is often in the $13,000 to $15,000 ballpark. And these funds can be used for a good range of business purposes as well, such as working capital, equipment, inventory, etc. Similar to the 7A we just touched on, just on a bit of a smaller scale. So along with the 7A, the 501, and microloan programs, the SBA also offers a handful of more, right? Disaster loans, for example. So this is to offer financial assistance to businesses affected by declared disasters, such as a hurricane zone or floods or wildfires. They also offer express loans, which is a streamlined process for obtaining small business loans with faster approval and turnaround times when you qualify for that. Cap lines is an additional one that you might see regarding SBA loans. It's designed to help small businesses meet short-term working capital needs. They also have the Export Working Capital Program, which is a program providing short-term working capital to small businesses specifically engaged in export activities. And then the international trade loans are often abbreviated ITLs, which provides long-term financing to small businesses involved in international trade. So with all this information, What should be the main takeaway every entrepreneur should know right now? I think it's loud and clear, right? It's that the SBA is set up for you to succeed as a small business owner. And the success for you and your business allows everyone involved to win. You win for obvious reasons, the business wins for obvious reasons, but in turn, your community and your market wins because they get to directly take advantage of whatever you offer while also feeding into the economy in a positive way, and even the potential of growing your business out, expanding your business to allow more jobs in the area to positively affect everyone involved there too. So whatever success your business has, directly or indirectly, is a win across the board. But in order to have that success in your business, you need to have success in the funding you need to get there, right? So that's exactly what Credit Suite does. And that's exactly where we come into play in all this. We've helped tens of thousands of business owners get the funding that they need, including the prep to get an SBA loan. So if you're ready to learn more about how we can specifically help you, I want you to head over to creditsuite.com/consult, CONSULT, or just click the link that's about to be dropped in chat or scan the QR code that's about to appear on the screen. You can fill out a very, very, very quick form. It'll take you 60 seconds, 30 seconds, 10 seconds. It'll take you literally nothing to fill this out. And then one of our experts will reach back out to you as soon as possible on that. Every minute you wait is another minute that you're further away from that financial freedom that you've worked so hard for. So I want you to head over to creditsuite.com/consult or give us a call directly at 877-600-2487. Let me make sure that QR code's put up on the screen here. So if you scan that QR code, it will take you right there, or you can go over to Credit Suite. Let me type this in. creditsuite.com/consult. That link right there, I just typed, there we go. That link right there that just dropped in chat back to back. Sorry about that. Head over there, fill out a quick form, or give us a call at 877-600-2487. And do not forget to drop a follow or a subscription on whatever platform you're watching us on right now. We post content almost every single day across our social media, and we do these streams twice a week. So with that, I'll be seeing you Thursday, and I look forward to seeing you then, but also we look forward to hearing you over at 877-600-2487 or creditsuite.com/consult. I'll see you real soon, and I'll talk to you in the next one. Bye-bye, everybody.